Hi, everyone. Welcome to our next episode. I am Brandon DeYoung, Executive Vice President for DeYoung Properties and President of DeYoung Mortgage. And today I have with me co-hosting the episode, Eric Armenta, Sales Manager for DeYoung Properties. Welcome to the episode, Eric.
Hey, Brandon. Thank you so much for having me. I'm super excited. What an honor.
Yeah, it's going to be a lot of fun. So today's topic actually is about financing a brand new home. So it's really a step-by-step guide to explain what are all the ins and outs financing a new home and what goes into it. And we'll have a Q&A towards the end. And so there's going to be a lot of great information about what goes into financing a dream home. And so with us, we thought we would pull in a few special guests with us this time. So DeYoung Mortgage, we have Doug Edwards, our mortgage loan officer, and Elizabeth Cabral, our mortgage loan processor. Welcome, guys. How you doing?
Hi, doing good.
Doing great.
Awesome. Excited to have you guys join as well. You'll be our experts on the call in the home financing realm. So I mentioned DeYoung Mortgage. So DeYoung Mortgage is an affiliate of DeYoung Properties. So DeYoung Properties being the home building company we have, but DeYoung Mortgage is the home financing company that we have. So it's an affiliated company. And so before we really jump into the topic, though, and talk a little bit more about DeYoung Mortgage, I thought it'd be fun to have everyone get to know us, the four of us, a little bit better. And so we could do a little fun question and answer for each of us and learn a little about each other. So how about this? I'll kick it off, and then we'll go to Doug, Liz, and then Eric. So let's start with an easy question. Something not many people may not know about me. Well, I used to be in a rock band, actually. So I played guitar and sang. So that was fun for a lot of years. But so that's something many people may not know about me. Doug, how about we go to you? I've heard something about your travels. So how about this? Who has traveled the most amount of states in the U.S.?
Yeah, I've traveled to a lot of states. Unfortunately, it wasn't with a rock band on tour or anything. But yeah, between business and pleasure, I counted it up the other day. I've been to 42 states.
Oh, wow. Well, you got to get those last 8 at some point.
Yeah, there's kind of a hodgepodge. I mean, Alabama, I'm south, and then a couple back east, and a couple. I've never been to either one of the Dakotas. I guess I can knock 2 of those out pretty quick sometime. But
Mount Rushmore.
Yeah. Don't ask me what I think the prettiest state is, because there's been so many. I mean, I would say probably Alaska during the summertime when it's light and you just see all of the mountains around. It's pretty incredible.
So I can imagine. Yeah, that's one I have not been to.
Yeah.
All right, Liz, how about we go to you? What department or company would you be in if you weren't with DeYoung Mortgage as one of our financing experts?
Well, if anybody knows me, they should probably know that I love construction. I love getting dirty, doing hard work out in the field. As a matter of fact, my husband and I belong to an organization where we do volunteer work, and I have my tool belt, I have my drills. So when I'm volunteering on the weekends, you'll probably see me dirty when there's no COVID, obviously. And as a matter of fact, I've even done some construction work with our construction department every couple of, I guess like about a year or 2 ago. I went out and got dirty with them out in painting a block wall. So if I wasn't in mortgage, I'd be in construction, definitely.
Awesome. Well, it's a nice little pastime too. So I like it. Yeah, you got to do it every day to still be able to go out and enjoy it. So that's good. Well, cool. And then we've got one more here for Eric. Eric, what is your favorite DeYoung Properties floor plan?
I love the question, and very easy question for me. Without question, the Residence 210. I actually live in a 210. Best decision in my life. I'm enjoying every day of it. There's actually a 210 club trending on Facebook right now.
I beg to differ, Eric. The 170 is even better.
Oh, the OG.
This is turning into a
170
debate, not a podcast anymore. I like it. I would tell you that would be a good debate, because I do love the 170, true veteran home.
Yeah. All right. Well, I think it's time to jump right in here. And I think it's a good idea to maybe give a little background on DeYoung Mortgage. So let's maybe have Liz. Maybe could you maybe give a little background on who is DeYoung Mortgage, what we do?
Yeah, so DeYoung Mortgage, we're, a broker, which we began in 2012. And between Doug and I, we have over 30 years of experience in real estate and lending industries, which we don't know completely everything, but we're very knowledgeable, and we've had success in helping many families. We're also a one-stop financing resource for all of our home buyers. All they have to do is just come drop off their stuff and we start working on their loans, because we all know that buying a home is stressful. So we try to make that part of that home buying process simple and easy.
The home, the home purchase is usually the biggest purchase that someone will ever make in their entire life. And as you can imagine, financing that purchase is a super important part of that. So yeah, like you said, trying to make it as seamless and easy as possible between buying a home, whether you're buying it from DeYoung Properties and financing it through DeYoung Mortgage, or you're buying another home and you do it just like DeYoung Mortgage to help with the financing. We're here to help. So yeah. Thank you for that overview. How about we jump to Doug? Can you maybe get a little bit more into the details? What is it exactly that DeYoung Mortgage can help our customers with?
Well, we can help with so many things, and I'll touch upon a few here. Loan limits programs, we'll get into some of those a little bit later, but loan limits as far as the conforming loan limit, what are FHA loan limits, what kind of programs do we have to offer, let's say for first-time buyers, really important information that's needed to pre-qualify. We'll get into that. Current interest rate trends. Liz and I, like she said, we've been in the business for quite a while. Interest rates do fluctuate. We cannot truly predict what will happen to interest rates in the future. Right now, they are very low and they're staying very, very solid. So we can certainly give you some information on interest rates. As far as down payment differences, that's important, whether or not you're going to put 5%, 10%, 20 or more, and the ramifications of that as far as the interest rate you can get, costs, and things like that. We'll get into a little bit later what to expect with financing during the construction phase. Liz will really go into that. And then we also, what we can help with is we don't just finance new DeYoung properties. DeYoung Mortgage is a mortgage company, and we do finance resale properties as well as can provide refinance services for our customers.
Very good. Thank you very much for that, Doug. Extremely informative. Elizabeth, if you may, I know a lot of our homeowners, when they start at the model homes, they pick their home, they're extremely excited during construction and they want to furnish their home and they want to go out and get, furniture and talk about a pool. What would you advise our excited home buyers to do during construction?
I advise them to wait till they get their keys to do any major spending while they're in the process of buying a home. There are certain things that you want to make sure you don't do. Some of them are, for example, increasing your credit spending or opening new accounts, as those will bring your FICO scores down. Also, large purchases, boats, vehicles, appliances, furniture, unless you're going to pay for them cash, don't put them on a credit card or don't put them on a new account. And don't co-sign. Even though that loan may not be your responsibility, it is going to be a liability. The lenders are going to look at it as a liability for you personally. And there are things that you can do to maybe increase your credit score. For example, keep your mortgage payments current all the time. That'll actually really help your credit score. Also, keeping your college or government loans current is important. Paying tax liabilities, if you owe taxes, pay them in full. If you can pay them in full, that'll help out for the lenders to review and approve those kinds of loans. If you're self-employed, process your taxes right away. I know that a lot of businesses actually, they do extensions. And although we can work with them, it is a little lengthier process. So we do encourage our self-employed buyers to go ahead and process their taxes immediately as soon as possible. If you have any changes in marital status, family size, or income changes, to inform us so that way we can update our file and make sure that your ratios are still within those guidelines where you qualify. And then if you're going to do a job change, if it's going to be in the same industry, also make sure that it's not going to affect your qualifying for your home. So call us before you do that kind of a change. Any type of change that will affect your financial portfolio, it would be a good idea to consult with us first so that way we know that it's not going to affect you. And all these things, you just have to remember that although you're pre-qualified, it doesn't mean that you are approved by the underwriter. So what that means is once you're close enough, we submit this to the underwriter for final approval. So as long as you take these steps that I just mentioned, we should be good to go when we're finally at that point of submitting the loan.
Very well. Thank you so much for that, Elizabeth. We have questions that are frequently asked, and the one here, believe it or not, is actually from Alaska. Isn't that ironic? Doug, how does the pre-qualification process work?
Are we building in Alaska now?
Totally kidding with you.
Okay, the pre-qualification with us is very, very important, a real important step. It starts with turning in a completed loan application with all supporting documentation, and we give you a list of those things that we need. Once received, we review the information. We ask, the questions we need to that may still be unresolved. We do pull a soft pull credit report, and that doesn't affect a credit score, but at the same time, it does give us the information necessary to determine the credit score and your debt to income ratio. If the credit score and the debt to income ratios are within the qualifying ranges, then we will issue a pre-qualification letter.
Super important info, and really appreciate that. Thank you, Doug. So how, if I'm a customer and I'm coming in for the first time, how do I submit all my information to you and Liz to make sure that we get everything pre-qualified right off the bat? What's the easiest way to do that?
Well, we do want to make it easy because we do want to get that information as fast as we can so we can get busy on the file and get the pre-qualification out. So, the easiest ways are email, fax it to us. We give you both of those vehicles to be able to get the information to us. You can also drop the information off at our main office here on Palm and Herndon, or you can drop it off with one of the sales associates, Eric or Tim or Petra. They can bring the documentation in. We try to make it easy, convenient for you, so whatever works best for our borrowers, our customers, that's the best way we can do it.
Awesome. And then once someone does get all their information in, how long does it usually take for us to turn around a pre-qualification for someone?
Well, I would say once again, the timeframes are really, they hinge upon whether or not we get complete documentation. That's kind of the key. Currently, our turn times are around 24 to 48 hours due to volume. If we have a file, it's a little more complicated. Liz mentioned earlier, somebody that's in business for themselves with all the tax returns and the schedules, that could take up to 72 hours or more. Once again, it really depends on the completeness of the information that we get.
We get a lot of first-time home buyers, and they come in asking certain questions. Are there any first-time home buyer programs out there that we should be aware of?
Yeah, there's several, and we'll look those up for you. We have 3% down, 5% down conventional loans, and FHA loans. So as long as these programs are available and to us, and so that we can provide them to you, we definitely will help those first-time home buyers.
Awesome. Really good. How much of a down payment would I have to be coming in with if I wanted to make a home purchase?
Well, generally speaking, it would be about 5%.
Okay, very good.
Cool. Now, what about those credit scores? Obviously people always hear about credit scores having to be really high to qualify for a loan. And I think I remember back, in the early 2000s when that housing boom was happening, that maybe got a little lax, but that's different these days, right?
Yeah, lenders are putting a minimum credit score, and they range anywhere from 620 to 640. So depending on the program and the lender that we're submitting your file to, it's going to be between 620 and 640.
Now, Doug, let's talk about jobs a little bit. If I'm coming in and wanting a new home loan, how long do I need to be in my current job to be able to qualify for a loan?
That's a question we get a lot. And once again, a very important part of the lending process and underwriting. You have to be on your job for a minimum of 2 years. And also that goes a little bit further with somebody that's in business for themselves, has their own business. That business itself has to have a 2-year history in order to count.
Okay. And now is that 2 years if you're not working for yourself? Is that 2 years within the same position and same company, or?
Yeah, good question. It's in the same occupation as well. So if let's say you are a chef at a restaurant and you move from one restaurant to the other restaurant, as long as you have been in that same food service, been a chef for 2 years or more, then that job will count.
Makes sense.
A question that we get a lot from homeowners out in the field as well too, Elizabeth. Very, very, the interest rates are doing well today. When can we lock our interest rate? A magic question.
Yeah, that is the magic question. Seems to come up on a daily basis. Well, as soon as we have the green light from construction, we can lock your loan anywhere from 60 to 90 days before your home is completed. Some people choose to lock it right then and there when we give them the rates. Others like to float it and see what the market does. And we certainly give you that choice, but definitely 60 to 90 days before your home is completed.
And now what about mortgage insurance? That sometimes comes up as well, and that can get kind of expensive. So let's talk about that a little bit. Doug, do you want to maybe give a little explanation of what it is and what kinds of loans it impacts?
Yeah, mortgage insurance basically protects the lender due to any kind of loss. It is required on all loans that have 20% or less down. The premium on mortgage insurance, it's very similar to what comes into play on interest rates as far as your FICO score, loan to value, and the mortgage insurance it's borrower paid through the monthly payment. And it is also not necessarily for the life of the loan. There are situations where mortgage insurance can be removed, and that is if the loan to value gets to 78% or lower, then mortgage insurance will be removed. You also can, once you believe your loan is at 80% loan to value, you can ask your service provider to remove the mortgage insurance. They may require an appraisal at that time, but those are the kind of parameters that mortgage insurance can be later on removed from the loan.
Okay, yeah, that's really good to know. And now, Liz, just jump back to you real quick. FHA loans. We touched on that briefly at the beginning of the podcast. Can you talk a little bit more about what FHA loans are and why they're beneficial?
Yeah, the FHA loans, they're considered a government-backed loan, and they have loan limits. One of the loan limits for the FHA is $331,760. With that, we do have, there are some that have a 3.5% down payment, or you can put more down. It's totally up to what your circumstances are. And like Doug said, FHA also carries mortgage insurance premiums when you put less than 20% down. The difference between the FHA and the conventional is the mortgage insurance can drop at a certain point. But when you do an FHA loan, the mortgage insurance is for the life of the loan. So unless you refinance or sell, you're going to carry that mortgage insurance with you. And the FICO scores, like I said, it's going to depend with the lenders, but usually they're going to be running right around 620 for an FHA loan.
Good to know.
Very good info. Doug, question for you. I don't know why anybody wouldn't, just because I went through DeYoung Mortgage and I had a phenomenal experience, and I know a lot of other customers who have had the same, but do we have to use DeYoung Mortgage?
Well, actually, it's a regulation that you can't steer customers to a certain mortgage company. So, number one, obviously, yes, you are free to use any company you choose. However, you will want to check with the sales team and check with Eric's team on incentives, the incentives that are offered when you do choose DeYoung Mortgage.
Well, thank you for that, Doug. I appreciate that. And Elizabeth, speaking of that, what are the benefits of going with DeYoung Mortgage if one did want to go with DeYoung Mortgage?
Well, there are several benefits, but the two main benefits of using DeYoung Mortgage is one of which is, since we're an affiliate with DeYoung Properties, we maintain a very close communication with them as far as where your home is in construction. And that way we can meet not only the needs of the builder, but we can also meet the needs of the buyer when it comes time to close. The second most common reason or benefit of using DeYoung Mortgage is when you use us, DeYoung Properties, which is the builder, they will provide an incentive for using us. For example, they'll provide 2 or 3% of the purchase price to pay for closing costs. And although this may not pay all of your closing costs, but it will pay a large portion of it. So you'll be coming in with very minimal closing cost fees.
Thank you very much for that. That was great information. Follow-up question to that question. Does the closing cost incentive cover all closing costs?
No, like I just mentioned, it's not going to cover the complete closing costs because there's so many factors when it comes to doing your loan, like the time of year you're closing, which month you're closing, the time of month you're closing. So fees can be less or more. So plan on still paying some closing costs, even though you're going to get that incentive from DeYoung Properties. Like I said, it'll cover a big portion of it, but it may not cover the whole thing.
Yeah, really good to know. Yeah, huge benefit, but yeah, really hard to say whether it'll cover 100% or not. But yeah, definitely a big portion. So now what about VA loans? I mean, obviously there's a lot of different kinds of loans out there, but VA is kind of a specific kind. Maybe tell us a little bit about that.
Yeah, I mean, we definitely appreciate the hard work and the sacrifice that our veterans do for us and our military and all of them. So we do have VA loans and we give they have great rates. We'll work within their budget and everything. So we do provide the VA loans.
And so they're Veterans Administration backed loans, I guess you could call it. Correct.
So we have access to them, and so they will have a certain guarantee on those loans. And again, it is a government loan. So with this loan, you won't have mortgage insurance. It's different from the FHA and conventional because of the fact that they are veterans. They provide certain leeways for them, so they won't have mortgage insurance in a VA loan.
And like even better interest rates, as I understand generally.
For the most part, yes. For the most part, they will have better interest rates.
That's great. Now, Doug, what about jumbo loans? Kind of going on the opposite end of the spectrum from, FHA with somewhat low limits. If you now are looking at a home that's got a price of $500,000, $600,000, $700,000, tell us about the jumbo loan product.
Well, there was a time, as I recall, in my career here in Fresno, in the Fresno marketplace, where jumbo loans, we didn't, not even close. But yes, we do have jumbo loans. Due to COVID-19 and the current market conditions, they are limited. A jumbo loan is a non-conforming loan. And what that means is that Freddie Mac, Fannie Mae they are not the investors. They do not buy these types of loans. They're non-conforming. So private investors, such as large insurance companies, things like that, will invest in the jumbo market. A lot of those investors left the marketplace for the time being, which makes the product limited. It is anything in our marketplace over $510,400 would then be a non-conforming jumbo loan.
And is that the loan amount or the sales price of the home? That
is the loan amount. So
okay.
For instance, if you were buying a home for, like I think you said, $650,000, $700,000, if the down payment didn't take you down to $510,400, it was above that, then you would be looking at a non-conforming jumbo loan. The reason why that's really important is they tend to be at a higher interest rate. Once again, it's a little higher risk. Investors are purchasing these loans. They also have more stringent guidelines. Typically FICO scores, I think Liz, mentioned 640 as 620, 640 kind of we're looking at in our conforming loans. A jumbo loan will typically be asking for a FICO in the 700s. And a little tighter on the down payments. There really aren't any 5% to 10% jumbo loans as far as down payment out there. It's more like 15, 20%. So more down payment, higher FICO scores, a little higher interest rate, and really looking at things. The majority of our borrowers are within the conforming loan limits. We really don't run into a lot of jumbos, but if we do, let's take a look at them because we do offer those.
That's great.
Thank you, Doug. Really good information on different types of financing. Changing speed a little bit. Question for you, Elizabeth. Let's say I was looking for maybe a resale home. Do I have to buy a DeYoung home to use DeYoung mortgage?
Not at all. You can use DeYoung mortgage to buy a resale home or even refinance your current home. The differences are, again, like we had mentioned before, DeYoung Properties offers an incentive for your closing costs. You have to remember that incentives or towards closing costs is offered by the seller. So in this case, if you're doing a resale home, you would have to negotiate, or your realtor would have to negotiate with the seller of that home to give you a portion for incentive for closing costs. So in that way, in that sense, we could, you could get incentives, but we absolutely do mortgages outside of DeYoung Properties new homes.
Okay, good. You kind of touched on that, but just to clarify, so if you are using DeYoung Properties, DeYoung Mortgage, can you get an incentive buying a resale home using DeYoung Mortgage?
Yeah, you can, and again, I reiterate, not from DeYoung Properties. You can get it from the seller of that resale home you are purchasing. You would have to negotiate that through your agent or the agents that are involved in order to get an incentive.
Great, very good. Thank you for that. Oh, here we go. A lovely model home location. I love that picture, by the way. Just kind of give you an idea of where we're located. If you are listening here and you want to come and visit our team and kind of get an idea of what you're looking for, if you are looking for a new home, we are located at our Shaw Welcome Center at Shaw and Highland. We are also located at our other Leonard Welcome Center at Dakota and Leonard. They're literally a minute apart. We are by appointment right now, just to keep everyone safe and make sure we're dedicating a lot of time. You can come and tour in person, so give us a call. Most likely you'll go online. You can contact our new home specialist, Gabriel Gutierrez, and schedule that appointment. And we can also do tours virtually on the computer or iPad, and also video chat. And there are scheduled self-guided home tours that you can take. If you go onto our webpage, you can also do interactive tours and video tours. Enter Now is a new app. You can actually go to our homes out in the field, download the Enter Now app, and you can type in a code and it'll give you immediate access to that home without an agent.
Yeah, so many different ways to come into our homes and get to know us. And we just are so excited to help anyone that is looking for a new home realize that dream of home ownership. And of course, with DeYoung Mortgage, our affiliate, our awesome team, Doug and Liz, thank you guys so much for joining us today. And
thank you for having us.
Yeah,
thank you.
Explaining to everyone why it's such a great process to go through, especially with DeYoung Mortgage. And so we'd love for everyone to come join the DeYoung family. And, we don't just stop there once you join. We're there with you as, taking care of you through the whole life of the loan. And if there's ever questions, if you ever need to do a refi. And on the DeYoung Property side, of course, we've got industry-leading warranties. So we're there with you through thick and thin. And so if you ever have any questions, you can go to our websites, DeYoungMortgage.com or DeYoungProperties.com. Thank you for joining us today on the Financing Your Dream Home Heart and Home series episode. Take care.
All right. Bye.
Bye.